more short-term capital gains, TDS on property, service tax and VAT. If you have any tax query related to real estate, you've tuned in to the right show. Hello and welcome to Magicbricks Now. You are watching Property Hotline. I'm Kavita Krishnan. With me today is our special guest, Samir Kanabar. Samir is Partner Tax and Regulatory Services at EY, and he'll be answering all your questions relating to real estate and taxes. Samir, welcome to the show.
Very good evening to viewers, and I'm delighted that the show has been preponed. I hope people take more advantage of it.
Right, Samir. Let's get started with a question that's come in on Twitter. Raghavendra Achar has tweeted in. Now, he wants to know if he should pay tax if he transfers his property to his daughter. Samir?
So, normally, any gift, and I believe this transaction should be in the nature of gift, and if it is a transaction between close relatives in the form of gift, then it is not taxable in the hands of either father or daughter. But I think some of the precautions in the kind of having gift deed done and proper documentation to demonstrate that there is a gift, and obviously such document being registered should substantiate their case for non-taxability.
Right. And Samir, I also believe that he'll have to pay lesser stamp duty when he registers a transaction, right? Because he's gifting it to his daughter.
Yeah, so of course this depends in state because stamp duty varies from state to state. I guess some states do have smaller amount of duty in case of gift, but some states do not give any significant relief. So that would have to be evaluated.
Right. I hope that answers your question. Moving on, we have Vishwanath who's called in from Bengaluru. How can we help you?
Yes, ma'am. Good evening. This is Vishwanath from Bangalore. See, I have a flat which was purchased about, in 1990.
Okay.
Which was developed by ourselves only, along with the developer, as a family property, which has got about 6 flats.
Okay.
And if I sell it now, the entire apartment we want to sell it off. So what will be the capital gains which I can claim in this? What is the price and how it is calculated between 1990 and now? It's almost 25 years old building.
Okay.
We had spent about 15 lakh rupees in those days.
15 lakh rupees, and there's
now it may fetch around 4 or 5 crores. So how do I calculate the capital gains in this?
How does he calculate capital gains? And that's a very different kind of question. It's not one flat that he's talking about. Yes. This is an apartment block, from what I understand. Yes. 6 flats in all, which they had built along with the developer for 15 lakh rupees in 1990. Yeah. Worth crores now.
Correct. So it's a very unique thing. The whole building or apartment was constructed comprising of 6 flats. So obviously, had it been a question of one flat, the answer was really simple and straightforward. But now there are 6 flats, so I'm not sure whether who occupies or whether there are different. It's leased out to tenants and it is just owned by Vishwanath. But assuming that so long as Vishwanath owns it and whoever occupies it, if the entire apartment is to be sold out, obviously. It will be treated as a commercial transaction because Vishwanath had motive to construct the building and then maybe either sell the flats or give it on lease or on tenancy to someone. So this being an adventure in kind of business, this is potentially likely to be regarded as business income as against capital gains. But obviously also it depends whether Vishwanath has classified this apartment as inventory, stock in trade, or whether it is regarded as pure investment. If the apartment is recorded and categorized as investment, then it is more likely to be capital gains in that scenario. But nevertheless, he would have to substantiate that what was the purpose of creating a building and treating it as an investment as against being an inventory. And if he is able to successfully demonstrate that yes, this building was for valid reasons an investment for his personal use essentially, and not for commercial
So
use.
Samir, how does he do that? How does he do that? How does he show that this was an investment and this was not inventory?
Yeah. So I think again the facts are lying in the question that whether he has leased out, what was his intention at the time when he constructed the property, to whom these 6 flats belong to. So all those things need to be answered. And if he's not occupying himself or his family is not occupying, but it is someone else, then it could be potentially being seen as a commercial transaction or a business transaction as against
So,
investment.
will the tax treatment or the tax outgo over here significantly differ? If it is inventory, if it is seen as inventory and not investment.
Yeah, because a capital gain would be assuming this is long term, so it would be only taxed at 20%. But if it is business income, it would be taxed at 30%. Plus, he will not get any indexation benefit. And also, what will happen is that he will not get the benefit of reinvesting this amount and getting any exemption, which otherwise is possible in capital gains.
So, if Vishwanath say were to go to a tax consultant, and there is a case that can be made for classifying this as investment vis-a-vis
Yes.
inventory, and where he can actually benefit from from the indexation, etc., and
Yeah.
claim exemption on long-term capital gains tax.
Yes. So again, the whole genesis is that whether he can distinguish that he is not in the business of property, he had no intention to do any business in this property. It was meant for self or for family. Otherwise, there will be no difference between a typical developer and Vishwanath, because if a developer gets taxed as business income, why not Vishwanath? So long as he is able to demonstrate, get adequate documentation done, he should be able to, in that case, treat it as a capital gain, and then he can get benefits. So what he can do in that case, A, he will get indexation, B, he should be able to reinvest this amount and get an exemption on capital gains.
Right. So Vishwanath, like I told you right at the outset, it's a complex question and you've got a complex answer over there. But the simple answer is this. The best thing that you can do right now is go to a tax consultant. There is a way in which, like Samir just told you, you can avail of the tax benefits. You can avail of that deduction that you get on long-term capital gains tax, the exemption, I'm sorry, by reinvesting the capital gains. But for that, the best thing that you can do and what you should ideally be doing is get the services of a tax consultant. Considering that the transaction that you're talking about is in crores of rupees, it does make sense to spend a few thousands on a tax consultant who will show you how to save crores and lakhs in tax at least. Yeah. Moving on, we have a website query that's come in. Kunal Rane says that he plans to invest in an under construction project in Mumbai. Now, the builder is asking for 4.5% service tax for an apartment that is worth 85 lakh rupees. Now, he wants to know if this is valid at the under construction stage. Does he need to pay that?
Yeah, so service tax has been made applicable on property which is under construction or till the time completion certificate is awarded, the property is treated as under construction, in which case I think 4.5% is the service tax applicable, which he is obliged to pay to the developer.
You know, Samir, I think Kunal's question here is more to do with when does he have to pay that service tax? And I'm reading between lines over here. But I think the point that he's making is I'm booking an under construction flat. So the flat is not ready yet. Does he need to pay service tax now? Or does he pay the service tax once he gets possession of the flat?
No, so service tax is charged by the developer. So whenever developer is raising invoices for the services, he would include the service tax in the invoice, and hence he has to, or Kunal has to pay service tax to the developer, who in turn will pay it to the government.
Okay, and this he will have to pay on every installment
Yes.
that he is paying
The
to the developer
would charge, yeah.
And that would be taxed at the rate of 4.5%.
Yes, yes, and of course, if the property continues, and we are talking about GST. So if GST comes in, then instead of service tax, GST could also potentially apply, unless there is any transition provisions in the GST brought in to say that no, GST would not apply and service tax would continue to apply because it's an old transaction, which is a very doubtful scenario.
So then what you're saying, and this is very interesting. What you're saying is that when GST does come in, and we're looking at possibly coming in by April 2017, and if that is the case, and if I have a flat which is under construction, and say it is possession is due in the December of 2017, in which case I'll have to pay GST and service tax both, and I'll not get any exemption on the service tax that I've already paid.
No, so service tax would apply till 31st March, assuming that on 1st April GST sees the light of the day. And then for the balance payments that you do from 1st April, only on those you will pay GST. And if GST today, as it is envisaged, is say between 18 to 22%, there being no special rate being prescribed for real estate, and I'm hoping that there eventually, as we graduate towards 1st April, as we move towards 1st April, we'll see some beneficial rates being prescribed for real estate like 4.5%. But otherwise, the cost could go as high.
You don't think that's a possibility, though? Because otherwise, I'm looking at a scenario where I'm going to be paying GST, I'm going to be paying stamp duty, which is to the tune of 6%. I'm going to pay a registration, which is around 1% if you're living in Maharashtra. And the stamp duty also is, by the way, the Maharashtra rate. And over and above that, a 1% TDS on immovable property.
No, there's VAT.
And there's VAT.
VAT, which is again 1%,
Again 1%.
Depending state to state. Maharashtra is 1%, so some other state it could be as high as 5-6%.
So if it stays at 18 to 22%, I'll be paying something like 30 to 32% only on taxes.
Yeah, so go buy a constructed or a developed property which has a completion certificate.
I almost don't want to buy a house anymore. However, like Samir said, there is a chance that, like service tax, the quantum was reduced. The GST quantum on real estate also will be reduced. We have another question, but if you could just explain that one bit of the tax that the way the service tax quantum has been reduced.
Yeah, so currently, of course, while service tax rate is 15 and odd %, but for real estate activity where there is embedded immovable property on which service tax cannot be levied, so there is a beneficial rate of 4.5%. So on that basis, currently 4.5% service tax is being levied.
So essentially, you're paying 4.5% instead of 15%, and there is a chance that with GST also something similar might happen. Instead of 18 or 20%, you might pay a much lower tax. However, that is something that the government will have to take a call on. But be assured that as and when the decision comes in, we will, of course, put it out on Magicbricks Now. Email query coming in now. Raghu says that he was allotted a property in 2011 that is yet to be registered. He's not yet taken possession. The last installment was paid in 2014. Now he wants to know if he'll get capital gains exemption if he sells the property now. He's not yet got possession, Samir.
Correct. So normally capital gains tax exemption is available if it is long term and not short term. And in his case, I'm assuming that it's a property kind of for quite some period or more than 3 years. So if it is more than 3 years, it will be long-term capital gains, in which case one has to see the date of agreement. So obviously in his query, I'm not sure whether he's saying the agreement is not registered, but whether the agreement is signed or not is not very clear.
I'll just run you through it again. He says that he was allotted a property in 2011.
Correct.
The property is not registered. He has not yet taken possession. Last installment was paid in 2014. Correct. So I'm assuming that if the last installment was paid in 2014, that means the construction is complete, more or less.
Yeah.
So I don't know if the OC, etc. has been given.
Yeah, but for determining long-term capital gains, or whether what is the period since which he is holding the property, which is a hidden question, is to know when the agreement was signed. So you take the date of agreement for determining the 3-year period, whether you have crossed 3-year period or you have not. Now he's saying he has not registered the property. He's also saying that there is an allotment. So there is always a letter of allotment, which is not an agreement. And he's saying he has paid installment, which is fine. There could be, as per letter of allotment, he would have paid an installment. But assuming that he has signed an agreement but not registered, probably that seems to be the scenario, then that date of agreement could still be considered for calculating 3-year period. And assuming that he signed agreement in 2011, then he obviously has crossed 3 years threshold, in which case it could be treated as long term and he should be eligible. But someone could potentially question that he signed agreement in 2011, he has till thus far not registered it, and he has not yet even taken the possession either. So what is the rationale behind just signing the agreement and not registering it? Did that agreement ever existed? So some documentation and some rationale would have to be substantiated to put his claim for long-term capital gains.
In fact, Raghu, what you also need to know is unless and until you register that agreement, the title has not technically passed into your hands. Registering the agreement is proof that you own the title to that property, and that is, that is basic. If anybody were to be buying property from you, for instance, if I were to buy that property from you, the first thing I would ask you for is a registered agreement, because that is the only way that you can transfer the title of property in my name or in the buyer's name, which is why the first thing you should probably do if you're planning to sell that property is go and register the agreement. We are assuming here that you've already signed the agreement. If not, please sign an agreement, register that agreement, and then try to sell the property. That will actually solve a lot of problems for you, and will also make it easier for you to calculate capital gains tax. As to answering your question, you will need to calculate capital gains tax from the date on which you sign the agreement. The allotment letter, do remember, is not an agreement. You need to have a separate agreement that you made with the developer. You need to sign that agreement, and that is the date from which you will calculate capital gains tax.
Perfect.
Okay. Moving on, we have a query that's come in on Facebook now. Somil Shetty says that he made an initial payment of 10 lakh rupees to a developer along with associated service tax at 3.71%, that amounts to 37,100 rupees for booking an apartment in Mumbai in 2014. Now, subsequently, due to personal reasons, he had to cancel the booking in the same year, for which the developer did return 10 lakh rupees paid by him. But the developer failed to return the service tax that he paid. When asked about it, the developer obviously said that the service tax paid to the government by them is impossible to refund. Now, can he get a refund on service tax amount that he was paid? Will the IT department actually refund that tax paid? And if yes, what is the procedure?
So, these are of course quite unique transactions where cancellation happens. But I think the law here, of course, the service tax law clearly provides that if the transaction has been reversed or nullified or cancelled, and in this case, of course, the amount has been entirely refunded as well. In such cases, as per law, the person who has paid service tax is entitled to get the refund of service tax as per the law. Obviously, the buyer would also be hesitant that if he refunds service tax, what happens to his position? And again, the law typically provides that in this kind of transactions, where buyer refunds the entire amount of the transaction and refunds the service tax, the builder or the developer will also be entitled to take the credit of this service tax in his service tax position. So it's a pass-through, it's a tax neutral transaction, a refund, which here seems to be very clear case. So both the buyer whose transaction has got cancelled and the developer would be able to take benefit of service tax by refunding and claiming credit.
So he just has to go to the service tax department and he has to tell them that he wants a refund. He applies for a refund.
No.
It?
He has to go back to the buyer,
He has
developer.
to go back to a developer.
And developer has to refund him, and developer in his service tax return has to reverse and take the credit of the service tax which he has refunded. So that's why it's a neutral transaction.
The problem here is that the developer has very clearly told him that, you've paid the service tax and the tax has gone to the authority.
Yeah.
Why should I refund it? So in this case, what does he do now?
Yeah, so developer will be having a running service tax account with the government. And when every 6 months when he files his return, in his return the developer will be able to reverse it or rectify the earlier return either ways and take the credit of it. So it's not that you have to go back, developer has to go back to government and take the refund and give it to him.
Exactly. So say he goes and tries to convince the developer,
Yeah.
and the developer is still not ready.
Yeah.
Then what? Is there legal recourse that he can take?
In terms of legal recourse, of course, it will be more driven by the contract, but the liability to pay service tax is on the developer and not on the buyer. So buyer is only discharging the service tax which is charged by the developer, but the primary liability is of the developer. So legal recourse more driven by the contract. I'm not sure whether he can go to service tax authorities and whether he'll get any relief from there, because service tax authorities would say that the liability was of developer has paid, let developer deal with you.
So Saumil, essentially here's what you can do. What I would advise is either you try and convince the developer yourself, and he looks like a straightforward company, or it looks like a straightforward guy to me.
Correct.
Because he's actually refunded the 10 lakh rupees that you paid when you booked the flat. So you can actually go and have a conversation with the developer. Better still if you could go there with an expert, with a tax consultant, who can explain the entire thing, entire process like Samir just explained to you, to the developer, and see what happens. If nothing works out, then of course you will have to approach the court. There is nothing else that you can do to get refund. And do remember that even if you do go to court, you have to ask the developer to refund the money and not the tax department. Email query coming in next. Prashant says that he inherited a property which underwent redevelopment. Now he was paid compensation in cash, which once paid was deposited in a capital gains account, which was subsequently used to buy another property. Now he wants to know if he should declare this amount as personal income tax if the same is actually deposited in a capital gains account with a nationalized bank. Now he sounds like somebody who has taken advice and actually planned his taxes.
Correct. So if I were to just understand, he's saying that he had a property which has gone for redevelopment.
Right.
And now he has also got a cash compensation.
Right.
So I'm not sure whether the compensation is for surrendering the property or for some other reason, and he will continue to get the property after redevelopment. But here it seems that it is a compensation paid to him for surrender. In which case it will be a capital gain transaction for him, because he has surrendered or he has returned back the property and he has realized the capital gains out of, or he has realized gains or compensation out of it, which is capital gain. And obviously, because if it is more than 3 years, it will be long term. So if he can reinvest, obviously he has put the money in capital gains bank account, but from that bank account, if within 1 year, if he or within 2 years, if he buys another property, then he should be entitled to exemption on the capital gains.
Right. So you've already planned your money right, and you have made that you have made that investment in capital gains account. Now just reinvest that money in another property within the 3-year or the 2-year time frame, and that should take care of your capital gains tax. That's it. With that, we've come to an end of today's episode of Property Hotline. Samir Kanabar, thank you very much for coming in and answering all those questions.
Thank you.
And if you have any queries related to real estate, do get in touch with us. We'll get the country's top experts to answer each and every one of them. Thank you very much for tuning in. Keep watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.